Hello everybody, welcome to F.A.C.E. We get our first round of jobs data today from the ADP numbers in just around 15 minutes. So we'll be keeping an eye on that and jumping over to that shortly. Until then, markets aren't doing an awful lot in the interim, just sort of mooching around because it's a big old data week this week. And so we're just getting ready for that, and a little bit of a volatility drop today. Right, before we kick off, as did on the Flow Show, just want to make everyone aware that we do have a 30% sale on our trader funding program accounts. All our assessment and instant funding accounts can have that discount, 30%. I've put the link in the Zoom chat for you there. Use code NEWYEAR26 to get that discount. That's running to the 18th of July. Right. Good morning, Steve. Good morning, Mr. K.
Good afternoon, right, until the 18th of July.
18th of January. I'm already way ahead of myself.
Watch out what you're saying, your live mate.
Oh, yeah, Blake just fell off his chair. Yeah, 18th of January. Sorry. Yeah, anyway. Right, so let's have a quick look at this ADP that's coming out. Depending on what calendar you're looking at, we're looking at 49, 50,000, a positive number, turning around last month's negative minus 32k. Now that was a bit at odds with the NFP data that we eventually got middle of December. We obviously got those October and November numbers together. However, the November number was a positive 64,000. Now a lot of people make differences between the ADP, so it's not a reflection of NFP and so on and so forth, but they do tend to generally move in the right direction. So that one was a negative last month in ADP, but a positive in the NFP. So there might be a bit of straightening out going on there. Now, something we discussed on the Flow Show this morning. We should probably be ready, because of the way the jobs market is at the moment. We should probably be ready just to see some of these up and down numbers. The difference that it will make to the Fed trade, the rates trade, expectations will be if we start really trending one way or another. For example, NFP, you might get a plus 50k and minus 50k the next month. And if there's no real trend, it keeps the market pretty much where it is. If we start trending higher, start seeing a run of positive 100k, 150k numbers, that's obviously more bullish for the US economy, less dovish for the Fed, and vice versa if we see a trend lower in jobs. So although these numbers are going to be important, from this point we really need to look at any trends that develop in the early part of the year, because that is going to guide monetary policy in the interim. Kay, get your first thoughts again on these ADP numbers and jobs in general.
Yeah, as you said, the ADP numbers are usually shrugged off by markets relatively rapidly. Perhaps today the combination ADP and the ISM, for which we will also get an employment number, that may be a small driver of markets, but we are in a situation where I think the market will already turn its attention to what's going to happen on Friday with the double whammy potential NFP reports, quotas deciding. But as far as ADP goes, it's been a bit of an up and down number, so I'm not sure it's going to be more than an algo blip, to be honest, today. But it's a first in the round of all the job reports that we are going to get, with jolts a bit later as well, and then tomorrow the challenges before the NFP. So it's a bit of a delayed one as well. I guess. I mean, delayed in the way that, as you say, we could see a bit of up and down in those December data as well. So yeah, I'm a bit reluctant to make a big trading decision on the back of just those ones.
Yeah, I think we're probably going to need to see a big variation to the number to get the market really moving. So look at something plus minus 100,000 That will probably get the market on its toes a little bit. If it's a 50, 60, 70 either way, probably not too much to it. We also get the ISM out as well, which again, the market likes to look at the jobs number, though that's been in the negative recently. 48.9 was the last read. And a quick look at the chart, see how that's been going. I think it's not been doing that well. So it's been in contraction for quite a few months, not exactly been booming a lot as well. So that sort of shows the picture, though it has had a little bit of a shallow uptrend developing. So that popping into the positive might inject some positivity for the buck later on when we get the report. Obviously, keep an eye on prices paid as well for the inflation component or the inflationary metric about that. We also get Jolt out today as well, which, depending on how the market takes it, it's a month behind everything else. This will be November data, but it just can show hiring intentions. And if there's more hiring intentions, it suggests that people are looking for workers. If they're lower job openings, then obviously then the market is perhaps getting a bit tighter. But that's all to come later on. Right, going to have a quick look around markets. It's been a bit dull this morning. As we said, pretty much in wait and see mode at the moment. There have been some decent moves. I'll get Kay to look at gold in a bit because that's moving around a bit. Euro not doing very much. It's still keeping this sort of bearish phase that we've had since late December, but we're talking pretty tight ranges here. Between this 117.5 down to this 116s, 50, 60s area. So the dollar is still finding its footing a little bit, depending on which pairs you look at. Probably the main mover overnight, and if any of our Yankee Doodle friends haven't picked up on the news yet, we had the Australian CPI data, which came in a little bit softer than expected. That didn't stop the Aussie dollar from hitting new highs. A lot of Aussie pairs hitting new highs around that, although some of the airs come out of that tire since then. We were talking about this on the Flow Show, what it means for the RBA. And it seems the market, irrespective of the news and the data, is not going to drop the bone of them hiking next month that easily. Maybe a case of that data wasn't softer than it was. And if it had been softer, maybe we would have seen a downward move in the Aussie dollar. So as we were saying on the Flow Show, Kay, there's still expectations there for a hike. We do get December CPI data, I believe, before the RBA, and the market making an excuse it's waiting for that. But as far as we're concerned, and as far as some of the market is concerned, a hike is still on the cards.
A hike is still on the cards, and as we've been talking about that yesterday and on the Flow Show as well, I still want to see the second hike priced in. But yeah, knowing that Bullock is a hawk, we can't rule it out. Aussie is still doing overall pretty well. Mainly due to those expectations as well, but just overall, Aussie is holding up pretty well against a lot of currencies. Those particular CPI data that we saw today are not going to change much either to market expectations, but also is not really a driver for the next hike, I would say. But again, it's a very good thing that we are going to get those December and quarterly CPI data coming out right before the next RBA meeting. So there, I reckon that the market will price in more of one or the other side for the Australian yields. So that's going to be an interesting one. In the meantime, I'm not 100% sure against the dollar, of course, but I can just see Aussie continue to do relatively well on the crosser side of things.
Yeah, absolutely. I was looking at this one, bit on the wide look. Aussie Kiwi, it's really making a move here. Again, as we spoke about earlier, this has been in a near 11-year range. So when you get breakouts of these types of patterns, they can be big. So this is a big, strong move all on its own. It's been pretty much a one-way trade. But we might still only be at the beginning of this move in terms of the overall, multi-decade long picture if you want to look at it. But it's got to find support, or it will be comforting to find support against some of these broken areas. If it does that, then that pretty much is a green light for further gains. So although it's done a lot, and you can look at it in the short term and think, yeah, well, you know, might be trying to top off, or you might want to try and pick tops. Always keep an eye on the wider picture, the bigger picture. These moves may take months and years to unfold, but these are the ones that can bring you the massive pips if you can see the signals for things like that. Ridwan asking about euro sterling. For me, we are just stuck at the moment. We've had this move down since the post-UK budget highs. It's been edging lower and lower and lower and lower. And then we had this early year blip where we got knocked right down. I've got this zone running here that has been on my charts forever. It's one of those zones where we tend to mess around when we're in it. It can become a bit of a pivot level or area. So you keep an eye on it, see what the price wants to do. Sometimes we're in, sometimes we're out. We do a lot of messing around. But once we usually make a move either side, like here, then you can get the move. And I think this is the way you've got to look at it at the moment. You want to try along here. I mean, if you've got an 86.40 stop, yeah, you know, that's pretty good enough for a short-term play if you're looking for a long. We had that low pretty much bang on the bottom of my zone here. We've got this other traffic down into the low 86s. The difficulty with this pair is how far do you want to put your stop? You can find a reason to put it here. You can find a reason to put it here. You can find a reason to put it here. So it's all about your pockets. But for me, you have to really look at going with whatever side out this zone we break, as long as it confirms. So we had a move here where it just wasn't fully confirming. And then all of a sudden, bang, yeah, we're not getting back into it, and off we go. So, yeah, longs may be a valid trade here. I'm not looking to touch it or add to my position until the low 86s, as I feel that's the potentially better opportunity to get into a long. We've had some pretty decent support along this area here in the low 86s. So that's where I'm looking at. I'm still long a little bit from down below there. I'm going to decide whether I chop out if we break this zone and then add back in down here, because remember, being long, you are paying a lot of money to sit in it if it's doing nothing, which is one consideration you have to make because of those carry costs. Kay, I know you're in the same side as me, bias as me at the moment. It's stopped falling at the moment. That's one thing, because we were a bit surprised about the pound gaining. Could have been some early year flows. The picture's still the same for the UK, so that should favour the upside and a weaker pound moving forward. But the when is the question.
Moving forward. But again, as you were saying, we don't know when the forward will happen. It has stopped falling indeed. I don't disagree with Ridwan if it's a real short-term trade, but as we were already showing on the flow show as well, and on my updates, if you're in the room, 86 figure a quarter around there is a massive zone for me. So looking at it from the longer or the more medium term, I'd love actually to see a test down there and a hold for them to confirm that this is really the base that we are building. I did dip my toe into a long again in this 50s zone. So yeah, I agree on the side. But
hey
as
boys,
says, when is the question really?
Yeah.
Good morning.
Yeah, we've got the
Steve.
ADP coming up. Yeah.
We have, that's what I want to tell you. We have ADP in 45 seconds, huh?
Yeah.
No worries. Let's bring the old data flash in. Oh, if I can. I'm breaking everything at the moment. Oh, come on. Where's it gone? There it is. It's over there. There we go. So this one's got 47,000, about 30 seconds to go. Steve, I know it's probably impossible, but you got 25 seconds to give us your opinion on ADP.
Give me less. That was too much.
Okay, you got 15 seconds.
Let's see if we're going to get this improvement over the last month. Definitely jobs are in the spotlight at the moment. because it's the excuse they've been using for, trying to
41,
keep on
41. There we go.
As
Yeah,
expected.
so it
There we
is close to expectations, an improvement from last month's -32. Not as much as they initially expected. Let's see if the market is going to react to it or not so much, because it was more or less rather close to the expected number.
Absolutely nothing.
There's
For
a
the
problem.
time being, yeah, the market, we also had the previous ones revised slightly from -32 to -29. So that's not a big revision either.
We've got a big issue is that the FX option vols are too low. It's too easy. And so we got too much liquidity on, especially if you look at the biggest pair like euro dollar, there's a bit too much liquidity on either side of the ranges right now. For that particular data to have a big impact.
Yeah, that's going to be a feature, I think. Pretty much
the problem in general is that the dollar index, which of course, more or less the vast majority of FX begins and ends there, has been stuck in a symmetrical triangle since May. So it's been now, what is that, 7 months or so that we've been oscillating in a contracting range. And, that is unfortunate for FX, because obviously until, because eventually it's going to happen, there's no question about it, until we see a resolution in the dollar range, the main FX pairs are not doing much. They're just chopping around with a few exceptions. And, that is a big issue for those that are mostly FX oriented. We're currently in the middle of that range with in regards to the DXY. So, we need to move decently higher or lower before we can start having a proper test of important levels in the DXY. Fortunately, though, other markets have been on the move and keeping us busy, like metals during the past few months. Otherwise, it would have been a very boring environment.
There you go, folks. Steve's dragged me into a DXY chart. Okay, I'll let you start the argument about whether the Dixie is the
No. Don't take me there. Don't take me there. No. Sorry, red card.
We'll have to do that. We'll have to do that on another show. There's a differing opinion between some of us in how important the Dixie is, being that it's a basket of currencies and doesn't lead anything. Yeah, I know some of you guys like to trade it, so we'll.
Yeah, the DXY is definitely not perfect. It has substantial flaws, right? Especially after the creation of the Eurozone. It was too much. It is too much Euro-oriented. There is no question about that. But, on the other hand, is it a completely useless index? In my opinion, no, it isn't.
Okay, I have to get out of the chart because I feel dirty. Right, Kay, I need to go and have a shower now. Kay, I'm going to stick across to you if you want to have a look at the metals.
Yeah, sure. And let's get a quick look at what's going on in gold. And what are we seeing? We're seeing our traditional early New York morning sell-off in the metals, which is starting to become a regular thing. Let me just move on a tighter one for the people in the chat and viewing us. So as I said, after the what happened in Venezuela and what's potentially still going to happen, people bought metals again as a reaction, a continuation as well of what's happening in the longer term. But for the short termers, I highlighted this 44.90, zone, which actually did cap yesterday. So that's for the technical watchers, an interesting one that we capped around there, 4,500. in gold, and we are starting to move lower. I highlighted also this a little zone here around 44.40 for the real short-termers. We have dropped below, probably triggering a couple of stops, maybe light stops, but really for even in the short term, I would view this 43.80-ish zone as a bit more important than, and obviously this trend line coming in around the last lows that we saw really into year end, which is always driven by some kind of flows, but it comes in around that level just above this 42.5 as well, which is going to be a much bigger zone for the medium term. Okay, but this is something that we have seen already many times now. When New York walks in, there's a bit of a drop off in the metals. Again, it's happening. So watch what's happening on the course of the afternoon, whether we can retake this 44, 40, 45 zone and then move up again. But technically, it's doing pretty okay if you look at the short term moves. All right, and I'd still say with everything that's going on in geopolitics, these kind of sell-offs, they could be met with buyers. And I would say that if we get anything more of a clear out there during the course of the New York morning, keep a close eye on what's going to happen around 43, around 43.80 if seen. Okay, silver. I had some comments again. The Shanghai exchange is putting more restrictions on silver trading, silver ranges, etc. And we had a bit of a drop down here, but at the time of production or at the time of release of that headline, we were turning around 78, around here 78.80, and it still looks to me like that early New York sell-off that is going through again in most of the metals. Let's see how long it lasts. The thing is with those measures, and we've been speaking about that in our room, obviously, is that maybe they can scare a few of the speculators away. Yes, we could argue that it puts a little bit of pressure on it short term, but it's really a double-edged sword, because putting more restrictions in the knowing that a lot of people are reluctant to release reserves, and we still have a shortage. There's still a lot of geopolitical stress going on. As I've been saying already many times, war eats silver by the bucket load as well. I doubt that we are going to go much lower.
Imagine if we start fighting vampires, huh? That's when we're gonna need tons of silver.
Oh yeah, for the crucifixes.
Yeah, for the silver bullets, right? And werewolves, yeah.
And the silver bullets. Yeah, the silver bullets as well. Yeah, right. You're right. But then I say in the meantime, there's a couple of levels to watching, but really short term, maybe around the 77, which we are on the approach of right now. But then you look at it a slightly wider. We do have a bit of a trend line coming in around 74-ish. But I'd still say that the bigger level that has been broken, retested, is around that 70 zones. It starts from around 70.80 down to 69.30. If you look at a few FIBs, this 38.2, for instance, this $1.5 zone, I think this is where it's going to play.
I can also see the possibility of spending some time consolidating the huge gains between that $70.5 pivot and the all-time highs. So this is a potential.
We're going to be looking at some kind of move that we had between 45 and 50.
Something like that. Because I mean, after such a massive move, at least spending some time consolidating the gains is to be expected, right?
Absolutely. If you look at it purely, let's say if everything remains status quo, that could be the case. But then we have to obviously take into account the volatility of the beast. You're still looking at a 15% or so, even a bit more, 15 to 20% range. So still be careful if you want to trade it short term.
Absolutely. I mean, people always need to take into account the volatility of anything when they choose to trade it, because you need to adjust accordingly your leverage, right?
Exactly.
Obviously, it's a different thing trading the Euro Swiss and a different thing trading natural gas, obviously.
Yeah. Oh, obviously. Speaking about Euro Swiss, actually, we had a bit of a setback there over the turn again, and but it's starting to show just that little bit, which is, and as Steve said, it's a cross that is for the granddads, right? But it does seem to show a little bit of support coming in there in those around that 92 3/4, and we are trying to get back.
92 to 92.5 cents has been, in my opinion, most likely, sadly defended by the S&P.
Yeah, I can see that. I did play it alongside of this when actually a pretty good one from November into December. Since then, I just watching the game, having a beer, because if you look at the longer term, we're still in a downtrend. But I do think that I'd love to see a retest of that zone here, and then if we hold it again, then we may start finally to start grind higher again. I'm not a Swiss buyer by no means. Why would you buy a 0% currency? And even if they got a bit of relief on the tariff front from Trump, I mean, Switzerland is economically still not out of the woods, I think, but it's just still acting as a very expensive parking place for people with all kinds of money. What else do we look at?
I was going to say, do you want to flick it onto SPX? Because we were talking, lamenting about how everyone else had made new highs, DAX and FTSE, and the S&P was lacking or lagging, and it went on yesterday to just nick a new high.
Yeah, it did. It did. And actually, if you look at where we are now, we're just hovering or just below, but just hovering below that trend line around here. If we would get a break above 69.5, 7K is just around the corner, right? The thing is that the market is actually viewing the fact that the Supreme Court may make that part of the tariffs or that legal argument of the tariffs unlawful, and the market is tempted to buy stocks on the back of it because the importers will not have to pay tariffs. I say it may be a kind of short-sighted view, although I'm not going to go short in the S&P, but it may be like a short-term argument. Maybe not so much for equity markets, but I do think there's another side to it. And of course, we know that the U.S. administration is going to find other ways to impose those tariffs. There's a lot of other numbered rules in there that they can use to impose those tariffs. But I would say they may be a bit of a negative for maybe bond markets also. And in that scenario, I'm not sure myself if, based on the fact that tariffs could be ruled unlawful, that we should be buying stocks. But I can be, of course, wrong.
Yeah, I mean, we were looking at the risk aspect of this decision on Friday, what it might mean for stocks, the dollar, and whatever. But if you want to draw some lines between them, one of the things, the big thing that Trump was going to use the tariff money for was to give effectively stimmy checks to the population, which will obviously naturally go into the stock market. So is that a line the market might take if it's negative news on Friday? It might be negative for stocks because people won't be getting their payouts.
Yeah, but on the other hand, what was
I
it?
don't think that people that take payouts are the
Driver?
are
Or
the you know, the average Joe. I don't think is the person that is actually investing in the equity markets. Overall, if you ask me, I think that tariffs being correctly declared unconstitutional, which they are, the way they've been imposed, is going to be positive for the economy.
I remember the COVID stimmy checks being a big booster, just a short-term booster for stocks, just on the fact that they were being given out. Was it $2,000 everyone got?
Yeah,
And
roughly $2,000. Yes.
and we're looking similar numbers if he.
Yeah,
If he
the problem since these checks though is that from when those checks were given 5 years ago, perhaps a little bit more, the actual cost of living has increased in many cases by more than 50%. So people actually need the checks now to just make a living. I don't
Yeah.
think there is much money left over to, to
Yeah.
invest to the equity markets.
That may well be the reality. I'm just talking about the potential headlines on Friday. It's going to be a short intraday move for the markets over what it might mean. Just trying to draw some lines as to what effects we may see in markets on Friday, and we'll deal with the rest of it afterwards. I see Blake's popped up. Good morning, sir.
Hey, good morning, guys. So what about that ADP data? Woo!
I bet you're watching it on a 1 minute chart as usual.
I was actually on a tick
Probably
chart.
10-second chart.
Yeah, tick
That's
chart.
exactly right. It's first of all, good morning, guys. Good morning, everyone. Yeah, that ADP data. I mean, even though it's a little softer, I think the market's well. Yeah, actually, you can look at the SPOOs. The SPOOs likes it as long as it's not a disaster number. I mean, risk is liking it. But there's so much I really want to talk with you guys about, but I know you probably all covered it.
I'm giving you the screen.
Oh, thanks, Kman. I appreciate it. So what do you guys, by the way, I'm going to look for Thomas to see if Thomas is here.
I've just promoted him.
Oh, you did? Okay, great. All right. I'm going to be taking over to do the interview with Thomas, and so glad he's here. But before I do so, I'm going to ask you guys this, and this is something that I know you guys have talked about it, but I'd love to hear your opinions really quick before we go. We have Opinion Day. Opinion, get it? We have Opinion Day from the Supreme Court on Friday. We may or may not get a decision, but more importantly, how muted do you think the reaction to the jobs report is going to be on Friday? Because volume's been so low. You know what I mean?
Yeah, I think it's going to be the variation to what's expected. That's going to be the real kicker. Like we saw with ADP, if it's on or around the number, I think the market gets over it pretty quickly. There still might be a little bit of washout to come because of the shutdown and moving through and everything like that. A fuller picture of the data, maybe getting a bit more in than they had before. So we could see some shenanigans, but I think it needs to be a big variation from what's expected to bring a decent move.
Okay. All right. Kman, you have any thoughts there?
Whether it will overshadow the jobs report, I don't know, because the market is already kind of expecting that they are going to shoot it down, but it all depends to what degree, right? And how ready the US government is to find the other rules to put them in place again. I still think the job reports can be a driver of stuff, and then we will just have to wait what the Supreme Court actually comes up with as reasons and justifications, and how and going forward, because they may not only talk about what's happening right here and now or around the tariffs, but also what they think should be done. Maybe in the future, right? I don't know. It's really an open question. We don't even know whether we are going to get a ruling on Friday, or if that will be postponed.
Right, right. Okay. Yeah, and will it, yeah, will we get a ruling? And here's the other question, Kman. And I'm not sure if Tomas Malinen's going to know about this. And by the way, Tomas, if you've seen this, I just tried to promote you. So if you can accept that promotion so we can bring you in as a panelist, that'd be great. Oh, he's coming over. He's here. Perfect. And he may have some further thoughts on this as well. So make sure you all stick around for this interview. But I wanted to say we may not, or let's say the betting markets are already starting to price in that the Supreme Court might, rule against, Trump's tariffs, but it doesn't mean that we're not going to see tariffs. Secretary Bessent has talked, and everybody, their whole administration has talked that they have other means and methods of making sure that these tariffs stay in place. It's just going to be more of a headache than anything. Don't you guys agree with that?
Yeah, absolutely.
Yeah.
I definitely agree that there are multiple ways to do something illegally. Yes.
Yes.
Yeah,
Did you say?
This thing Friday, it in the press, it's been taken as it's not actually a ruling, it's just an early opinion. But I think again, it's the severity of it. If it's a flat, yes, this is, very illegal and it needs to be reversed, then that's going to hit the market more than if something comes out like, oh, well, it might be illegal, we need to do further research or digging into it.
I think that if the Trump administration is smart and they actually understand basic economics, they should be wishing for the tariffs to be declared illegal. And then they should, play the card that the system is fighting us. We wanted to do all this good for the economy, but they're not letting us do it. Because the impact of removing the tariffs is going to be 100% positive for the US economy, because the tariffs are obviously not being paid by Chinese or any other country or any other country's citizens. They're being paid by importers, and then that price increase is being passed on to the consumers. So then they can have a win-win situation, because that is going to give a relief to the economy. That's going to give a relief, at least temporarily, to inflation. And at the same time, they can use it as a scapegoat along with Powell. That's going to be the second pillar of scapegoating. When things go wrong, they can be, something. We had the perfect plan. We wanted to do things right. We wanted to make the economy great. But if it wasn't for that beep Powell that didn't know how to handle monetary policy and the Supreme Court ruling against our tariffs, everything would be great. They are the ones that derail the economy.
Well, Steve, great ideas and great thoughts, and I'm gonna get thoughts from our guest. He's been waiting here, so I appreciate you guys and your thoughts on these ideas. I want to thank you, Steve, Ryan, Kman, for all of your views today, and for being on the F.A.C.E show and always keeping us in the loop and on the right track in the markets. But I'm going to turn our attention over to our guest of the half an hour, Tomas Malinen, and thank you guys. Have a great day, and make sure you all stick around for this interview, by the way.
Cheers.
Cheers. Thanks, guys. Thanks, Kman. Thanks, Ryan. Thanks, Steve. All right, Tomas.
Hello.
Good afternoon.
Good afternoon. So I'm speaking with you today.
Yes, you are. Dale is not here, but I'm going to handle this interview. And I've heard you on the F.A.C.E show over the years. I want to thank you so much for joining us today. Can you do me a favor, since you and I, this is our very first time speaking? Could you tell us a little bit about yourself and how you look at the markets and your views?
Actually, well, what could I tell you? I was 10 years in the academia. Then I left, or didn't find a proper or position that would have satisfied me and decided to, work full time with our company. So that's what I do. We basically have my X page there saying the essentials. And so we have been doing GNS Economics is me and 4 other partners, and we are looking to extend our rider base as we speak. And they just today, when I was actually walking to the store before to buy some meat, I'm on carnivore diet for close to 4 years. It's an excellent thing. I recommend to everyone. It has basically healed me. I'm turning 50, but it feels more like I'm turning 35. So high recommendations to that. And but I was thinking about the markets, and the thing here is now that what is happening after Venezuela in the Middle East hints that something is coming, and we cannot naturally be 100% sure of anything, because there are multiple factors determining whether Israel will launch the second phase of the war against Iran or not. But I was pondering that the likelihood of it is so high that we should be prepared for a noticeable market turbulence and the skyrocketing price of gold, possibly oil, and also natural gas. And the two last ones would become the rapid price rises of oil and natural gas would become as a result of Iran militarizing the Strait of Hormuz, through which 1/3 of all the natural gas used in the world and 1/6, of the oil used in the world travels through. And so there are multiple scenarios we can think from this, but at this point, I would urge for a preparations to prepare for a dire times ahead. So that's my general view on the markets. If I'm realizing or monetizing some assets, and I don't know, do I get that money in time? But I would, if I would get it on time before anything major happens in the Middle East, I would probably put most of it on gold, preferably gold. But this has been my and our recommendation for quite a while.
Okay, thank you very much, and it's good to get some of your initial views. So let me ask you this before we start talking about what the market dynamics may be. I mean, obviously, you just kind of gave it up that gold is where you'd want to be, and it's obviously had a very good run and something you've been talking about for a while. But let's talk a little bit about Venezuela, and let's talk about its impact on crude oil. And I'm going to ask you just a couple questions here, and maybe you can. I don't know if your expertise on Venezuela and its oil capacity and its production, what it could put online. But what would be, first of all, the near-term implications of what's happening in Venezuela, and its near-term implications on crude oil, and then its longer-term implications on crude oil?
Well, actually, yeah, I'm not much of an oil expert, but I follow actually several accounts of oil experts, which I have learned to trust over the years, and their message from Venezuela is uniform. It will take a decade to meaningfully increase their output of oil. A decade, 10 years. And some put it like in the range of 8 years to 10 years, but it will take a long time.
Yeah.
So it doesn't, it really, and like if we look at the oil production of Iraq, after US took over, it collapsed. So historically, and not to mention Libya. So historically, what has happened after the US has taken over these countries or oil producing countries, the oil output has not really grown. So Based on everything I've read, I don't see that much changes because of it. There
Okay,
will,
not in the near term then.
yeah, and neither in the near or medium terms. In the long term, maybe, but 10 years is a long time in this current environment. So it's a lifetime basically. So, but yeah, based on everything I've read, I don't expect not much to change. I think the global recession, which looks to be rolling in, is the main driving factor, in addition to the possible war escalating between Israel and Iran. So I think if you're gonna invest in oil, you should really look at the global economic indicators and what they're hinting, and what our forecast is hinting, and what is happening in the Middle East. Because
Now,
these, yeah, let me explain it.
Oh yeah,
Middle
yeah,
East
sure
thing
thing.
is that it was sometime around, was it in September or October, and the accounts linked to the Iranian army published a picture where it was some of the generals, some of the leaders, and he was pictured doing some planning or observing the map that presented the Strait of Hormuz. And this was interpreted by the analysts who follow Iran as a signal to the rest of the world that the Strait of Hormuz will be in play if there is a second round of in the Iran-Israel war. And
Yeah.
I did quite an extensive study on the Strait of Hormuz when the conflict started in October 23, or when the troubles or escalation started, let's put it this way, in the Middle East. And it is a truly a it's a I named the beast as the sword of Damocles, which is hanging over the world. And Iran has the ability to shut down the strait. It would it seriously hurt her economy too, but it would be it would carry a devastating effect for the rest of the world. So this is the risk everyone is facing in the oil markets, but also what comes to the global economy and markets.
Sure. Okay. Since you mentioned Iran, everything that's happening right now in Iran, and by the way, the lack of coverage that it's getting around the world is almost criminal in my opinion.
Mm.
How are you feeling about what is happening today at this moment in Iran, and what are the implications moving forward?
Well, I during the 12-day war, I managed to find actually 3 accounts from Iran, which were very accurate in their description of the war. And as a strike of chance or something, I also got to know some Finnish Iranian businessmen who have been in Finland for 3 decades, and they naturally have their own connections to Iran. And I've been talking to them and reading the accounts that what is truly happening in Iran, and it looks to be that that all the demonstrations they are economic. They are because of price hikes, and they have been weaponized in the western cities of Iran, especially within those cities where there are nuclear facilities. They have been weaponized and they have turned violent. And the Iranian army leadership just communicated this morning that it's highly suspicious that peaceful demonstrations aimed mostly on economic hardships have been turned into these violent riots. And they are directly suspecting that there's a foreign component at play, which of course relates to Mossad and CIA.
Mm-hmm.
And
right.
So it's my what I learned from my sources. There is no coup going on. And the interesting thing is that these Finnish Iranian businessmen, they told me during the summer and early fall that Iranian people have not been this united for a very long time. It has been a divided country almost from the center. Other half supporting the Islamist regime, and others just wanting to live their lives. So this has been going on for quite some time, but now they have the 12-day war brought them together. So what I hear is that from the perspective of a nation, it's more united than it has been since probably the Iraq war or for a very long time. And this is something that is not communicated anywhere. And we have to understand that the media, like the social media campaign, for example, showing that the regime is about to collapse, it's what I learned, it's almost purely propaganda. And so
Yeah.
so this is how I see it through my contacts. I trust them, so I trust this information.
Yeah, no, that makes sense. And as TT had mentioned in the comments, when is there not a foreign component or agitator
Yeah.
at play? So
Yeah.
yeah, CIA.
Since the 60s, CIA and then also KGB, they run over the world causing chaos. Now it's just mostly CIA and Mossad, because the FSB doesn't really have the resources. The CIA and Mossad, like TT says, Mossad, they have massive resources. Some my friends who have worked in the global or international intelligence community say that Mossad is the most pervasive intelligence agency in existence currently. So these contacts hint that they would surpass even the MI6 and the CIA on how pervasive they are. So yeah.
Yeah. Well, okay. Well, Tomas, very interesting point of view. And by the way, I just want to go back to your all meat carnivore diet. I'm 53 myself, and I don't know if I could give up pasta. I'm not sure how you did it. So congratulations. Congratulations.
No, you exchange it. You tried for some time, and then you realize that how good it makes you feel. And if you still want to have a cheat days in a week, then just do it.
Yeah, I always have to have one cheat day when I diet. Anyway, great stuff. So you talked about gold. Now gold, obviously, and I know you're an economist, not necessarily a market technician, I'm assuming, or a timer. But we've seen this precious metals rally, and I know you'd mentioned, and I didn't know this ahead of time. So you'd mentioned you'd been very constructive on gold for a while, and I mean, we've seen it over the course of the last couple of years, basically double in price or close to. I mean, what do you if you own gold, or you probably do, like I own gold, and it's not necessarily like I trade my, the physical stuff, but as a trader or as an investor, I mean, do you really start buying gold at 4,400, 4,450, 4,500, after having such a big run up over the last couple of years?
I would, and I will if I get the funds. It's just because we at GNS Economics started to advocate gold to our customers it was in June 2018, I think. And the information we gathered up until 2020, 2021 was in a way, it implied that, for example, there would be a plan in place in China. If the world economy collapses, they will tie their whole pension system into gold. And in gold. If there would be a global recession or depression, they would tie the funds of the pension system in the gold. And we tried to assess what would be the price of gold after all this, and we got to something like 10,000. So it's just the reason why I would buy gold, and I will buy more gold. I have some, it's not much, but a big share of actually what I can invest at the moment, the financial assets. The reason is that I envisaged this scenario of peak escalation in was it in November 2023, which implies that there are strong background forces in the world that will keep escalating. If some like hotspot like Ukraine, if peace is found, which now looks that it's not happening, but if peace is found, it will flare up somewhere else. And this started as a worst case scenario. And after a year, it had turned our most likely scenario because it was so good at forecasting what will come next. So it is currently in place, and its forecasting power is very good. And it indicates that we will see further steps of escalation, probably leading even into World War III. But that's the absolute worst case scenario. But it's just, I'm trusting on the hypothesis we have and what it implies. This does not rule out a small crashes in the price of gold, but the overall trend should continue upwards.
Okay, thank you. And I mean, your target of 10,000 doesn't seem so illogical at this point in time. So
no, when the gold was 2,000, it sounded preposterous, but not anymore.
Yes. Yeah, not anymore. That's right. Before I let you go, I do want to ask you one more question about your thoughts on the dollar and its role as a reserve currency, especially in light of the Trump administration and their views on wanting to, weaken the dollar, make the dollar, what are your views about the US dollar right now and moving forward?
I pondered also this because I thought that Dale or you will ask about this. And well, I did my I did my PhD thesis basically on, I used stochastic statistical methods to analyze the relationship between income inequality and economic growth. And there's a quite strong result in econometrics, that is economic sciences or statistical version of the economic sciences, that all foreign exchange rates are essentially random walks, which means that they cannot be forecasted. That said, I would take the risk angle here. We know that before, where if there is trouble in the world, USD is the safe haven asset, one of those. But I'm not sure it holds anymore. So we have a risk of actual USD collapse because of the fiscal deficit, because of the problem we are seeing in the bond markets. However, what comes to this year, for example, I would not call for a USD crash. It could even become more expensive, so the value could improve. But I don't like forecasting the FX rates because I think they are random walks and they are impossible to forecast. That's the statistician in me coming into play. But we have to prepare for extreme scenarios. But I tend to think at this time USD could still act as a safe haven if something really troubling happens. So it could appreciate. But this
so
is
you think it still could hail as a safe haven asset of choice if there was panic in the markets? Then
it could, unless there is a banking crisis emerges in the US, which is also possible during this year. So it's
sure.
Yeah. So I think everything converges to my original assessment that the price or the FX rate is a random walk and we cannot forecast it. But if you want to flip a dice with the FX rates, then please do it.
All right. Well, Tomas, it's been my pleasure speaking with you. I'm actually going to follow you right now. You can see it, and I urge that our viewers follow Tomas as well. You're in Helsinki, which is obviously a lot cooler than where I live in Scottsdale, Arizona. So
Yeah, it's something like -6, I think, at the moment, Celsius, centigrade.
Woo, boy.
No, that's
But
nothing. That's nothing. Like when you have -20 centigrade, then it's cold.
oh, that sounds cold. And Tomas, I'm gonna urge that you follow me back, so this way I
I
can
will.
reach out and have you back on the F.A.C.E show. And if you guys haven't checked out his Substack, he's got a lot of articles and information on his Substack. So Tomas, it's been my pleasure.
And let me add to this. Today there will be a not my first, but there will be a piece written. I will publish a piece about the escalation tensions between Iran and Israel. So it will be a freebie today. So I urge everyone to read it if you want to understand towards what we are heading in the Middle East.
Well, that's amazing, and I urge everybody to do that. So, Tomas, it has been a pleasure. I will reach out to you. Like I said, I'm going to reach out to you in the next few weeks. I'll have you back on the F.A.C.E show, and I want to thank you for really blessing our community with your time today.
Thank you, and we'll talk again.
Absolutely, sir.
Okay.
All right, traders, thank you so much for tuning in today. It's been my pleasure to meet with Tomas. And I'll look forward to seeing you guys tomorrow as well. You guys have a great day and a great trading day. And remember, Opinion Day is only a couple of days away, just after non-farm payroll. So it's going to be a jam-packed week this week in the market. So I'll catch you guys later. I'll catch you tomorrow. And for those of you that are Forex Analytics subscribers, I'll see you guys on the Morning Edge in about 15 minutes. All right. Thanks, everybody. Have a great day. Ciao.